management. Now let's understand the topic transfer pricing. Now in this particular topic transfer pricing, there are two type of questions expected from the examination point of view. One is theory question, that is discuss various methods of transfer pricing, and the second one is numerical, where you will be given certain data, and on the basis of data you will have to calculate transfer pricing. To begin with, let's understand the meaning of transfer pricing. Transfer pricing in a decentralized profit center, the monetary value at which transfer of goods and services from one profit center to another profit center. So goods are being transferred from one center to another center of the same company. Sorry, one division to another division of same company, and it is accounted for the evaluation of performance of profit. Now, while transferring that good or services from one division to another division, so the first division, they charge at a particular price. That price is known as transfer pricing, because they are transferring from their division to another division. Simply, it is known as transfer pricing. Now, let me tell you a simple example to understand meaning of transfer pricing. Am I audible? Hello? Hello? Am I audible?
Yes, sir, audible. Screen
Okay.
sharing not visible.
Now, in transfer pricing, let me quote you a very simple example. Now, let's
So screen दिसत नाहीये.
screen actually there is a net issue, so I am connected with mobile. And even I am trying to connect this, and just give me a minute. Let's assume that, say, bread making unit. they manufacture a bread, and there is another division who prepares sandwich. So as we know, for sandwich, bread is required. So here there are two divisions. One division who manufactures bread, and the other division who prepares sandwiches. And there are different type of sandwiches. So may I know what are the type of sandwiches? You might have tasted sandwiches in a hotel restaurant. What are the type of sandwiches? Hello? 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 Am I audible?
Yes, sir.
So what are the type of sandwiches? Sandwich प्रकार काय आहेत?
So grill sandwich, veg sandwich.
चीज सैंडविच, प्लेन सैंडविच, है ना? करेक्ट? Grill sandwich, plain sandwich, cheese sandwich. Now these are certain types of sandwiches. Now there are two divisions. One division who manufactures bread, and the other division who prepares sandwiches. Now the first division after manufacturing bread, which is given to the second division. Now second division, while transferring to the second division, so there must be certain cost to that bread, is it not? त्याला काही कॉस्ट आहे का नाही? पहिल्या डिव्हिजनला जेव्हा ते ब्रेड सेकंड डिव्हिजनला देतात त्यावेळेला काहीतरी कॉस्ट लावतील ना ते, मॅन्युफॅक्चरिंग कॉस्ट, और दे विल नॉट चार्ज?
Yes, sir. Manufacturing cost will they incur?
मॅन्युफॅक्चरिंग कॉस्ट लावतील सेकंड डिव्हिजनला, बरोबर? नाव सेकंड डिव्हिजनचा जॉब काय आहे? व्हॉट इज देअर जॉब सेकंड डिव्हिजन? इन माय एक्झाम्पल, इफ यू अंडरस्टूड, व्हॉट इज द जॉब ऑफ सेकंड डिव्हिजन?
Making of sandwiches.
Making of sandwiches. So they will add some ingredients to that bread, maybe cheese, chutney, and some stuff they will add. बरोबर की नाही?
Yes, sir.
After adding that stuff, then finally it will be served to the customer. Now second division, whatever price they have paid to the first division, that price plus value added by second division. What is the value addition of second division in this example? Have they added something, or they haven't added anything? Have they added something, or they have not
Yes, sir.
added anything? They have added. Okay, so for that addition they will add to the earlier cost. Suppose if bread cost is say 10 rupees, just assume that 10 rupees. Second division who have added stuff and something to that bread. Suppose if that stuff is say 5 rupees, so 10 plus 5, 15, and plus some profit of second division, maybe say 3 rupees profit. So 15 plus 3, 18 rupees. Now 18 rupees will be charged to the customer. Now out of this, if I ask you how much amount will go to the first division out of 18 rupees? Out of 18, how much amount will go to the first division? Yes. How much amount? Hello? How much amount will be given to the first division? Hello? Are you there?
Yes, sir.
40 to 50 rupees.
How much?
30 to 40 rupees.
Out of 18 rupees, 30 to 40 rupees. See, first division who provides bread and their cost is 10 rupees. Now this bread is given to the second division. Second division have added some stuff to that bread, maybe cheese, chutney, something. And the cost of stuff is 5 rupees. So 10 plus 5, how much?
15.
15. And second division is expecting some profit. Say, let's assume that profit is 3 rupees. So 15 plus 3 is how much?
18.
18 rupees. So at 18 rupees, it will be sold to the customer, 18 rupees. Now I am asking you, how much amount will be given to the first division out of 18? How much amount will be paid to the first division out of 18? How much amount? Out of 18, 10 rupees, no? Hello?
Yes, sir.
10 rupees. And remaining amount will be given to whom? Remaining amount? Remaining amount will be given to the second division. It will be given to the second division. Correct?
Yes, sir.
That will be given to the second division, 8 rupees. So this process is called as a transfer pricing. So likewise in a corporate also, one division never prepares the article and which is being given to the customer. There are 2-3 divisions involved. That is why I gave you the example of sandwich. So likewise, there may be example like say car manufacturing company. So one division cannot complete manufacturing of car. The car goes through several divisions, 3-4 divisions, and then final product is being developed. So here, whatever divisions are there, each and every division, there are managers. So unless and until managers are given share of profit, they will not be motivated. So they should be given share of profit. Then only managers are motivated. So let's understand the objectives of transfer pricing. Objective number 1, to maintain optimum trade-off between company cost and revenue. Transfer pricing objective is to maintain trade-off between cost and revenue. Means their cost and income. Cost should be minimum and revenue should be maximum. Then only division will have profit. So that is why maintain optimum trade-off between company cost and revenue. Number 2, it should induce goal congruent decision. Now what is this goal congruent decision? Goal congruence. It is the mathematical concept. Goal congruence means every individual goal and company's goal. So there are two different goals, company goal and personal goal. They should match somewhere. Then only they will go to the one direction. If personal goal is different, totally different, and company goal is also totally different, in that case, we cannot have goal congruent. Goal congruent means meeting with each other. That line should meet with each other. Now let me give you examples. Now suppose if I ask you about company, what are the goal of company? What are the objective of company? Goal means objective. What is the objective of company?
Earn profit.
Earning profit. Very true. So that is the ultimate goal of company. And suppose we are employee of that company. So as an employee, what is our objective? As an employee, our what is our objective?
Quality
Being
of
huh?
quality of product.
As an employee, I am talking about employee. You are an employee of that company. So what could be your objective as an employee? Your objective may
Get
be,
good salary.
yes, to get a good salary, to get say post retirement benefit, salary, then maybe provident fund, post retirement benefit. So these are some general objectives of employee, as you said, to get a good salary, to get incentive. Am I correct? Bonus, correct or not?
Yes, sir.
Now let's understand. Now company's objective is to earn profit, and our objective as an employee is to earn good salary, to get incentive and post retirement benefit. Now if company is making good amount of profit, now certainly company can fulfill this wish or not. If company is making good amount of profit, so out of the profit they will also satisfy the needs of employee or not. If company is making good amount of profit, so will they fulfill the wish of employee or not?
Yes, sir.
Yes, certainly they will fulfill. So here the both objectives are matching. So long company is getting profit, and company will fulfill the wish of their employees. So here objectives are matching with each other, and this is called as a goal congruence. This is called as a goal congruence. So this is in respect of employee. Now let us understand another stakeholder of a company, say customer. Now company might be having another objective, that to provide say quality product to their customers, quality product. So that could be a second objective of company. Now here, being a customer, you expect reasonable price as a customer, and you also expect quality of the product. Am I correct? Reasonable price and quality of product.
Yes, sir.
हेच आपण एक्सपेक्ट करतो की नाही as a customer. Yes or not?
Yes, sir.
So here also these both goals, means both objectives are matching at a certain point. uh, Customer goal and company goal. So long it is matching, then it is the example of goal congruence. Now the third objective, it should measure economic performance of the individual profit center. So that is the beauty of transfer pricing. It should measure economic performance of individual profit center. And the last one is, it should be simple to understand and is easy to administer, because for implementation purpose it should be easy, it should not be complicated. If you are making transfer pricing complicated, then people will not understand. So it should be easy to understand and simple to implement, so that way. So these are the objectives of transfer pricing. These ppts I will be uploading on our institute website, so there you can refer these ppts. Okay. Now we will talk about the fundamental principle. Now what it is, fundamental principle? One second. Hello. 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 Hello.
Yes, sir.
Hello. Hello.
Yes,
Hello.
sir.
Yes. Just give me a minute. Now network has started. Let me share with screen. Okay. Be there. I am sharing screen now. Be there. Okay. Hello. Can you hear me?
Yes, sir.
Onlineच राहावा. I am connecting network. Hello. Hello.
Yes, sir. Audible.
Audible, na? Okay. Yes, can you see the screen?
Yes, sir.
Meaning we have discussed now. As I was trying to explain you the objectives of transfer pricing, and as I mentioned, there are two type of questions expected on transfer pricing. One is theory question, that is discuss various methods of transfer pricing, and numerical. And we will also go to the numerical. As I told you, today is our last session on enterprises performance management. Okay. So objectives we have discussed. Now let's know the types of transfer pricing. One is market price. Can you see this screen? Market price. Hello.
Yes, sir.
Market price. It refers to a price and an intermediate market between independent buyer and seller. Between buyer and seller, the price is that is known as market price. It represents true opportunity cost
and provides incentive for efficient production. It breaks down when there is excess capacity. So market price. Another one is cost-based price. What is cost-based price? When external market do not exist, means when there are no competitors, only one company who is producing that particular thing. That company follows cost-based price, whatever material cost, labor cost, and plus their profit. With this, they decide a price that is known as cost-based price. All costs are considered, and to that cost, profit is added. That is known as cost-based price. Now, variable cost, full cost, standard cost, opportunity cost. These costs are being considered in cost-based price. Then negotiated price. What is this negotiated price? Means there is bargaining between buyer and seller, and for that bargaining, you should have knowledge about market, about the product. Then only we can negotiate, and it avoids mistrust and bad feelings. So you feel that okay, he was telling me 100 rupees, but I have purchased this thing at 75 rupees. So that satisfaction you have that in market the thing was available at 100 rupees, but you have purchased at the rate of 75. So that kind of feeling customer has. So that is in negotiated price. Then there is a dual price. In dual price, selling division sells the transfer goods at a profit using full cost plus profit margin. That is why it is a dual price. Dual price means full cost plus profit margin. That is dual price. What is dual price? Yes. What is dual price? Full cost plus what? Profit margin. So that is dual price. Now with this say theory, can we go to a numerical on transfer pricing? Shall I share you the next screen of transfer pricing on numerical on transfer pricing? Shall I go? Hello?
Yes, sir.
Now let me share with you the transfer pricing numerical, and from the examination point of view. Now, can you see my screen?
Yes, sir.
Now, what it is, can you read out? Can you read out the first line? Can you read out first line?
Yes, sir.
Read.
ABC company expects 25% return on investment on the total production of
Yes, on the total production of 1 lakh units. Calculate transfer pricing from the data given below. So this company is expecting production of 1 lakh units, and they are expecting 25% ROI, return on investment. Calculate transfer pricing. Okay. Now this data is given in the table. There are two columns, particular and amount in rupees. Particular variable cost. How much is the variable cost per unit?
65%.
65 rupees. And what is the fixed cost per unit?
9 rupees.
9 rupees. Now inventory 2,75,000 rupees. Inventory is nothing but the material which is maintained by a company, and material inventory, it is a part of current asset. Okay, it is a part of current asset. Then there are debtors. Debtor is also part of current asset, 50,000, and there are fixed assets, 5,75,000. So last three items, which are current assets and fixed asset. So addition of current assets and fixed asset, altogether it is known as investment. त्याला काय म्हणतो आपण? Investment of a company. What do you mean by investment? Total of current assets and fixed asset. What is investment? Yes. What is investment?
Total of fixed asset and current asset.
Current asset. So if I ask you, what is the total investment this company has? Total investment this company has, how much it is? Can we make a total? Last three figures. What is the total of this investment?
9 lakh.
Exactly 9 lakh. Yes, it is exactly 9 lakh of rupees. And on this 9 lakh of rupees, how much company expects return? It is mentioned in the first line.
25%.
So 25% on investment. Now, let's calculate transfer pricing. Already we have given variable cost and fixed cost. Now, how to calculate transfer pricing? Okay. Now, what you have to do? Let me share with you the another slide. In the this is our problem, is it? Barabar na?
Yes, sir.
Now, variable cost 65 rupees. Right, that's 65 rupees variable cost. We are calculating transfer price of this product. So 65 rupees. Then plus fixed cost. How much is the fixed cost?
9 rupees.
65 plus 9.
74.
74. And company expects 25% return on investment. And total investment, just now we have calculated, it is 9 lakh rupees. Correct? Total investment, it is how much?
9 lakh.
So calculate 25% on 9 lakhs rupees. Calculate that. How much it is?
2,25,000.
2,25,000. Now this 2,25,000, this we expect for how much production? How many units they are producing? Look at this screen. How many units they are producing?
One lakh.
So 2,25,000 divided by 1 lakh. Calculate that amount. 2,25,000 divided by 1 lakh unit. So that you will get per unit ROI. That is the rate. 22 rupees 50 paise, correct?
Yes,
2
sir.
lakh, 2 lakh
Yes,
25,
sir.
2,25,000 divided by 1 lakh. You will get 22 rupees 50 paise. And what is the cost of variable and fixed cost? Just now we have calculated how much it was. 65 plus 9, 74. Barabar na? Now add this 74 rupees to 22.5.
Sir, 2.5.
2.5. 2,25,000 divided by 1 lakh. Calculation करून बघा. 2,25,000 divided by 1 lakh. How much it is?
2.25.
2.25.
Yes, sir.
$2.25 plus 74 rupees. 74 is what? Variable cost 65 and 9 rupees fixed cost.
76.25.
76.25. So 76.25. This is nothing but the transfer price of this product. So what we did in this example, we consider variable cost 65 rupees. We have also considered fixed cost 9 rupees. And then we total all assets, current assets and fixed assets. Likewise, say inventory, data and fixed asset. All total of these assets. And on this total, we have calculated 25% return on investment because it is given in the numerical. Company expects 25% return on investment. And investment amount is 9 lakh of rupees. As you calculated, 25% on 9 lakh of rupees. That came to 2,25,000 rupees. And total production, it is 1 lakh unit. So this total return on investment divided by 1 lakh. So we got per unit ROI 2.25. And that 2.25 we added to this variable cost and fixed cost. This way, we calculated transfer pricing. So these kind of numericals are expected in examination. Have you understood this example?
Yes, sir.
Any doubt?
No doubt, sir.
Now here, let me repeat once again. You have to understand what is the variable cost given in the numerical. Write that variable cost separately. Then what is the fixed cost given in numerical? Again, add to variable cost. Then identify what are the investment company has made. So investment are nothing but current assets and fixed assets. All current assets and fixed assets. But here you should know which items comes under current asset and which are the fixed asset. Okay. Take addition of that asset. That is nothing but the investment. And there you have to calculate the return, that is percentage. In this example, 25% return are given. Maybe 20%, maybe 30%, whatever return company expects. That percent you have to calculate on total amount of investment. And then whatever company is making production, now this company is making 1 lakh units total production. Divide that so that you will get per unit transfer price. You will get what? What you will get? Per unit transfer pricing. Barabar na? You will get per unit transfer pricing. After calculating per unit transfer pricing, add to the cost, and this way we can calculate transfer price. Okay. Suppose in examination, if this kind of numericals are asked, so can you able to solve this kind of numerical calculation of transfer pricing on the basis of cost? Can you calculate transfer pricing? Yes. Can you able to calculate or not?
Yes, sir.
Okay, so prepare from the point of view examination, calculation of transfer pricing, because there are numericals asked in examination. So have a practice, and maybe suppose in case if you are having any doubt, you can meet me in an institute, or you can call me also as per your convenience. Maybe you can come to the institute and meet me, or you can make a call also. So with this, I declare that our topic enterprises performance management, all 5 units are being completed. So complete your assignment, whatever given. and submit it. So before we close today's session, if you have any doubt, you are welcome to ask. Otherwise, we will end the session. Yes, any doubt? Am I audible?
Yes.
So any doubt so far?
No. Sir.
Okay, then prepare from the examination point of view. I wish you every success. All the best. Thank you.
Thank you, sir.
Thank you.